And now, for the next 50 minutes, we are joined from Paris by the syndicated radio host, BBC TV show presenter on the economy, Huffington Post writer. MaxKeiser.com is the website. That is his namesake for Max Keiser, the guest. And he is a filmmaker, broadcaster, former broker, and positions trader. And he is the inventor of a popular virtual specialist technology software used in many high-tech stock market systems today, like the Hollywood Stock Exchange. And joining us to give us his perspective on the economy and where this insanity, this looting is going, is Max Keiser from Paris. Welcome, Max.
Hey, Alex. How's it going? Thanks for coming on my show this past week. It's on the web. It's on the net now if people want to check it out.
You bet. MaxKeiser.com. Max, so much is going on. I'm going to try to sit back until the next break, then I've got more questions. And I'm not going to ask questions. What is most important? What is coming out of Max Keiser's brain first?
Okay. Well, I think you just have to read the financial news, and you get a good idea of, what we can expect, what's going on. Just to go back, if you remember back in the 1999 period, that was when they repealed the Glass-Steagall Act, which was in place since the Depression, to keep banks and brokers from getting each other's business. And that was one of the firewalls that kept the economy from becoming overly speculative and keeping the Ponzi schemes that were alive in the 20s to prevent them from coming back on stream. Well, that was repealed in 1999 with Greenspan, of course. Then in April of 2004, Greenspan and the SEC, they allowed the banks to change their what's called the capital ratios, the amount of assets that they keep on the books versus loans. It was for every dollar in assets they could make roughly $12 in loans. They changed that so that for every dollar in assets they could make $30 in loans. So it allowed the banks to keep a lot less capital on hand. It allowed them to do what we call structured finance. It allowed them to get involved in the global Ponzi scheme that eventually in 2006 and 2007 blew up, which caused the current crisis that we're still dealing with. So that brings us all the way up to the present. And in the present, just to give you an idea of how the rules and how the accounting rules, it's basically the crisis. If you look at it in terms of just how the accounting rules are misused, you get a sense that pretty much that's where the source of all of the fraud takes place. So here you have, just on April 2nd, accounting rules for banks came back into effect, which allows them to avoid having to value on their books the true value of these busted securities and busted bonds, the so-called mark-to-market standard. So in other words, if you had a bond on your bank's book and it had dropped by 80 or 90 or 95% in value, you don't have to declare that in fact has dropped that much in value. What you do is you determine that according to a computer model, the value of that security might be worth something in the future, and maybe under certain conditions, the so-called mark-to-model method. And since they allow that to be imposed, to be enforced, you've got situations, for example, where Citigroup, they just came out and they said, thanks to these changes, Citigroup was able to book $1 billion in gains for the quarter when, in fact, they're sitting on billions of dollars of losses. And it goes right down the line. Wells Fargo, of course, a similar situation. That's Warren Buffett's one of his big holdings. And so what this is all leading up to, Alex, is another leg of the banking meltdown. So we only had really the first leg, which started in the summer of 2007. That lasted about up until recently. And during that period of time, the banks, of course, are totally connected through Goldman Sachs and Tim Geithner and all the Goldman Sachs alumni and Robert Rubins and all these guys, the revolving door between the federal government and Goldman Sachs, they were able to get the government to give them tens of billions, hundreds of billions, trillions of dollars, fresh IOUs, fresh commitments from the U.S. taxpayer to make whole all of the bad bets that they had made that had gone bust. And now that they
was globally
ensconced behind the, with that bailout money, and now that they have manipulated the market over the past couple of months and booked incredible gains through accounting tricks, through manipulating the bank stocks. The bank stocks, when the Hank Paulson and then Geithner were threatening to implode the system unless they got that bailout money.
Yeah, back in early October.
Directly into the pocket of insiders and executives. It never really has filtered out into the general economy at all. So this is the first leg. The bankers have been taken care of. Now we're getting ready for the second leg. So the second major leg of the banking meltdown is now getting ready to start over the next short term. So this is, and we're already seeing it in countries around the world, like in Latvia, for example, which is a client of many of these banks on Wall Street. They are undergoing a major currency crisis as we speak. They are infecting, it's a huge contagion. They're infecting the Swedish banks. Once the Swedish banks now renationalize their banking system, a part of their banking system, they completely nationalized their system back in 1993. That will send the contagion to Western European banks. And, of course, then the contagion will come right back to American banks once again. And I predict that by the end of the year, all these banks will go back to Congress and demand another 10, 12, 15 trillion in additional bailout money. And then this will be really when the total impact of the entire crisis fully hits, because at that point it'll become quite obvious that the currency, the paper currency that has fueled this fraud for decades is truly worthless. And that's when you see this inflation that I've been talking about and other guests on your show have been talking about as well.
Max, that was my next question, and let's get into that now. $14.8 trillion, according to Bloomberg, in the first 7 months, and we haven't got any new numbers in the last month. $10 trillion in the rest of the world of taxpayer money that we have to pay interest on to give to bankers offshore. Now we're paying in bailout money to move GM to China and to Brazil and Russia. The public doesn't even understand that, along with the pensions going bye-bye, basically. Obama's saying he's going to balance the budget and all this delusional claptrap. And what is this going to do to the currency? You got Geithner getting laughed at. I mean, this is crazy.
Yeah, well, we talked about the currency situation a couple of days ago. And the U.S. dollar, of course, is the world reserve currency. And it has an interesting role in this global meltdown because every time you find that there is a huge, let's say, crisis overseas, there's a knee-jerk reaction where people will buy back into the U.S. dollar temporarily as a safe haven. And then once the smoke clears and they realize that the U.S. is really the biggest basket case of all, the money flows out. Now, over the past 20 years, certainly under Bush, one of the ways that the dollar was defended.
Hold on. Tell us how the dollar was defended in a moment, Max. Got to go to break. We'll be right back.
Everything we said came true. Everything we've done's been right.
I want to be sure and kind of shift gears in the next segment for listeners to know that I want to talk about the on-the-ground effects of this, what it's going to start looking like on Main Street. It's already bleak out there as this deteriorates, and what you politically see in your crystal ball in the future coming out of this, not just in the U.S., but globally. You're in Europe. Go ahead.
Well, yeah, getting back to what we were saying before the break and what this is going to mean, to the day-to-day reality. During the Bush years, the way that the U.S. was supporting the dollar was they would just, invade countries. Certainly under when Saddam Hussein started trading his oil in euros, that was one of the reasons that, shortly thereafter you saw shock and awe and Bush invading Iraq. In Iran, they also were talking about trading their oil in euros, and of course the belligerence toward Iran heated up. And it was interesting that comments were made in the speech this week by Obama. He mentioned that the 1953 coup in Iran was in part facilitated by America's CIA, which is something that another one of your guests, John Perkins, the economic hitman, has been talking about in details in his book. So it's interesting that these things are coming to light, and it's not on the Alex Jones show, but it's coming from a major addresses from the President of the United States. So the things that you've been talking about that have really been in the shadows are now starting to come to light. Now, going forward, since so much is coming to light because of the work of people like yourself, these banks are going to have to rely more on financial engineering and financial fraud.